Yo, boys, I think I just got this figured out. I need a haircut so bad. But anyways, this is going to be another video, a trading video. Today we're going to be teaching you guys a little bit more about CISD, time frame alignment, and of course we're going to go over the strategy again because I think it's just such a perfect strategy. So without further ado, we're going to get right into it. So what I want to get into a little bit about today is actually also going to be daily bias. So this is pretty straightforward. So let's take this day because it's the most obvious. So this is on Wednesday of last week, actually. So this is pretty straightforward. You guys are very familiar with this. This is a fair value gap right here. So we're just drawing out this 4-hour fair value gap, labeling it, of course, bullish fair value gap. So what I'm looking for when I'm finding my daily bias is higher time frame fair value gaps. This is very key. We can even look at the daily. There's one right here as well. It never gets tapped into, so we don't really need to use it, but we do have an inverse on the daily. So I'm going to go ahead and mark this out. I'll go ahead and delete this 4-hour fair value gap because I want to show you guys, more importantly, this inverse on the daily. So when I'm finding my daily bias, I'm always looking at the larger time frame first. So I'm starting on the daily because, of course, that's the highest time frame besides weekly and monthly, but I don't really need to use weekly and monthly. So now that we're on this, we can see that we have clearly closed above this daily bearish fair value gap, meaning price is going to head towards the next liquidity pool, which is going to be right here. So this is pretty straightforward. As you can see, we sweep this and we're still pushing above. We're closing above this, so I'm still bullish, right? But that's not what I want to get into down here. So first I go on the daily, right? We have an inverse, perfect. Then I go to the 4-hour. What do we have? We have a 4-hour fair value gap. And what I want to see is price respect this 4-hour gap. So this is bullish. And this also overlaps with the daily fair value gap. But we have a 4-hour gap. So what am I looking for? Using time frame alignment, if I'm to be bullish on the day, I'm looking for a 15-minute close above a high that was created after tapping into this 4-hour gap. So using time frame alignment because it goes the 4-hour to the 15-minute, right? Don't ask me why, that's just how it is. So we're going to go ahead and go on to the 15-minute. So now that we're on the 15-minute, we can clearly see where price tapped into it, right? So this is pretty straightforward. Again, we're going to be looking for a CISD. Now the CISD here, it's pretty to your own discretion, but think of it like an order block being invalidated. So I like to see this one. This is our CISD right here. So I like to see price close above this high. I use this one because it's the safest, most obvious high. Some people will use like this candle being closed above as CISD. You can use that as well. It works fine. As you can see, price closes above it, comes back into the CISD and taps into it. And boom, there's your bias. So once I see this 15-minute CISD get closed above, even this one is better because I like when it forms a high and then we close above it. That's more of a change of state of delivery. But we can still see price delivering out of this 15-minute gap. So I'm fine with taking this early one, or this early one up here, sorry. But either way, it doesn't really matter. Whichever one you have been taught to use, if it works for you, it works for you. Me personally, I've been trading for 3+ years now, so I kind of have just that intuition where I know like, okay, we've had a good move out of this 4-hour gap. I'm expecting if we can get a close above this order block, then we should be good, regardless of, whatever. So I know if we get a close above this candle, we should be seeing a good change in state of delivery. So you can use this one, or you can even use this one, which is technically the proper one, right up here. And as you can see, we closed above it. So anyways, you'd be looking for your entry somewhere in here so that you could use this 15-minute gap and then breaking it down, wait for a 1-minute or even a 5-minute close. And then of course, breaking it down further, we're going to go ahead onto the 1-minute. And then you can see that, okay, we have closed about out of it. So this could be your entry, also inversing this. So it's a good, pretty setup here. This is after normal market hours. So this is not really a trade I would be taking anyways, but just to show you that this setup occurs anytime. A lot of people have coined this strategy. It's just a simple taking most of the most popular ICT concepts and combining them into one, just fair value gaps, CISD. Some people are calling it the forever model. Whatever. I've been using this model forever, so maybe that's why it's called the forever model. I don't know. But essentially, it's just waiting for a CISD. You get some sort of SMT, fair value gap, and then you're just entering off of that. Basic strategy, people would just give names to anything just for marketing purposes. But it works. If it works, it works, so I'm not here to diss on anything. Okay, so next what I want to show you is like today's trade, because there was one trade entry I saw but I didn't take because I could tell that the market conditions were not in my favor. This trade would have been a loss anyway, so I didn't end up taking it, but it did follow proper model, proper strategy, and proper risk. Never entered it. I know some of my students that entered it and they took a loss on it, which is okay. And I say this every time: if you are trading and taking a loss, following your rules, I don't count it as a loss. If you're using proper risk, proper management, you're following your rules, you're trading the correct model, your bias was aligned with everything. If everything's aligned and you take a loss, it's fine. Take it as a normal trade, just another lesson, just another day in the book, right? You're not going to make money every single time you place money on the line, right? So, anyways, I'm going to go ahead and get this set up and then I'll talk to you guys when it's ready. All right, boys. So I'm back. I just looked at the setup. So for today, it was pretty much simple. We have SMT currently with NQ and ES. So from this high is swept on ES over here. Right here has been swept on ES. As you can see, we sweep it. It's right there. On NQ, it has not been swept. So there's SMT formed right there. You can mark it out. Pretty straightforward. Just mark it out. So you can mark this out as SMT right here. So this can give you a bearish bias going into the day. So we have bearish SMT here. Perfect. So there kind of forms already a bias I have. Now, looking at the chart, there is conflicting ideas because we do have a 4-hour fair value gap that's being respected, but you don't know this until price plays out, right? Because you don't know this until price closes back above it, and we never really get a strong close out of it or really above it right now. So going down to the 1 hour, kind of find what everyone was looking at. So the trade most people took was shorts because of this SMT that was put in. Using the model, we'll go ahead and mark out market open. So this is Wednesday at 6:30, right? So this is when market opened and market closed at. So I went ahead and marked out the opening of the 6:30 candle and the close of the 1 o'clock candle. So this is 13 right here because I'm on Pacific time. So for me, it's not the 9:30 open that you guys are used to in New York. So going into Wednesday, you can see that we had a push in the morning and invalidating this 15-minute fair value gap that was formed in the pre-market. Most people entered off of, I believe there was the CISD off of this opening candle. So people caught longs pretty early in the morning. And what I was seeing across was people would take this 3-minute entry, and then someone in my Discord actually took this 3-minute entry and then just entered off of the 1-minute close. So this was a good trade here. So the risk on this trade was about 24 points, and your target was that SMT, which you didn't know was going to be SMT because obviously this happened before it was occurred. But moving forward, this was about a 150 point trade. I believe most people took profit at 80 points on this, so it was about a 1-4 risk to reward, which is still really, really good. Now going down to the 1 minute, the reason I give this an A+ setup is because we have this large candle pushing into the market open, which is normally a good sign of bullishness, especially with going on with the news with Trump being elected and everything. And everyone knows that with Trump being elected, the stock market tends to push higher. For whatever reason, the economy likes him, so this causes stocks to trend higher. So looking at this open, we have this 1 minute gap that we close into and then we close above, forming a CISD with this highs up here. So another setup one of my students take, and I actually really like this setup. This is a 1 minute screenshot. This is with SMT with NQ and ES. So NQ sweeps this high, but ES does not. So this is already bearish SMT. Then as you can see, we get the CISD off of these lows, and then tapping into this 1 minute fair value gap. That was his entry. He waited for the close just as I teach, which is perfect. Stop above the fair value gap, so protected stop as you have the fair value gap there and the CISD protecting your stop loss and targeting sell side. So this is another A+ setup. I really like this. This is using the Forever model, which is I think Justin Werland teaches this one. This is a great model. Same concepts I teach. Just fair value gap, CISD, enter, and then of course SMT. I always say that it's the cherry on the top. So I really like this setup. It's similar setup to this, but we didn't have SMT at the lows. We had SMT at the highs. But this SMT was formed during the day. Because we have this SMT formed, that's when I like to see this bearish move down because it's validating the SMT. On these types of days, I'm pretty neutral because we have bearish SMT with ES, but we also have this 4-hour fair value gap that could hold. So I'm looking for a strong close below this to continue to the downside because that would validate the SMT. But as you can see, we kind of just push below it. We sort of close out of it, but not a strong close, so I wouldn't consider this a flip in your bias. And then we continue to push up, closing above this fair value gap again. But essentially for daily bias, it's pretty straightforward. I follow the same step process every single morning I trade. It's just you start from the higher time frame, work your way down. So you start from the weekly, the daily, the 4-hour, the 1 hour, the 15-minute. vice versa. I just look for any fair value gaps that are being validated, any fair value gaps that are being invalidated. I look for order blocks. Change in state of deliveries are the most important as well, because if you have a 4-hour fair value gap, you're looking for a 15-minute CISD, which will confirm that the 4-hour fair value gap was actually valid, and you can look for longs. So yeah, I just wanted to make this short video on daily bias and kind of a little bit about CISD, and then also rating some setups from this week that we have taken in the group, and some setups that my students have taken on their own. So I'm super proud of them. They've been killing it this week. I've been getting a bunch of messages from them saying all these setups that they've been taking. So with that, I'm going to end off the video here. Just a quick little video again on setup ratings, some trades my students have taken, and off of daily bias a little bit on that. So my next video, I want to go into standard deviation because I haven't really posted about that yet. And I think with the upcoming inauguration that already happened and Trump being in office, we're going to see a lot of uptrends coming up because of the recent inauguration and Trump being elected and all that. So there's not going to be price targets for you guys to target. So using standard deviation is really going to help out with finding price targets intraday, so you know where you're targeting when you're taking profits, and you're not just randomly taking profits at where you think price is going to stop. This is actually a given spot where you can look for price to reach and take profit at. So with that being said, I'm going to head out for the day, get this video edited and posted for you guys, and I'll see you in the next one.